Good morning, everyone. I want to take a look at Amazon and Apple. We haven't looked at a couple of these in a while. Good place to update. Looking at the daily chart, we've got the 4-hour 50, the daily 50, the 200 caught between moving averages, and this is a traditional reversal formation. Now let's see if there's any kind of price action that's suggesting that this is going to reverse. Okay, so we've had a big upside press right here. I wonder what the size, that's a 50% retrace. Let's borrow this right here, just for giggles. 61.8 retracement from that leg. So that signals a little bit of reversal. Also, we're crammed up into these moving averages right up here, caught between them. All of this, plus this candlestick formation, is suggesting that we have downside momentum on the way. Interestingly enough, pre-market, because we do have some downside drift in the pre-market, we have a little move to the downside, printing 243.14, but not that much. Watch for the chart to move sideways and then down. That's definitely what I am seeing here with Amazon. This line here is a particular line in the sand. Also, let's shift it down so you can see it. That's a lot of noise. 238.71. Let's see how well it holds that region. If it can hold that region pretty well, then it's got more upside to go. But a standard 61.8 retracement event does mean that we are very, very accustomed to seeing retracement on that space. Where's the retrace to? If it's going to hold the level well and move to the upside, 38.2 to 41.4, which is sitting somewhere in the middle right here. That's exactly what it is that we're looking at, and then there'll be more upside. For right now, though, we've got inflection on a number of very, very important things that I look at. And this doji, excuse me for the sniffles, this doji is suggesting that we have pullback on the horizon. So what's the trade? The trade is the loss of 242.50. Actually, I'll take that back. The loss of 242.20 with a confirming candlestick on a 15-minute chart is going to give you downside momentum. That ought to be a pretty nice trade. All right, good luck with that. Let's take a look at Apple. All right, here's a take on Apple. This is the 4-hour chart. Notice this is the daily 50. We've breached it, but see this 590 test failure. Retest failure, retest breach and a hold, and then a failure, and then a retest and a hold very nicely, and then a retest like this, and now all of a sudden we're back up here. Let's take a look at the formations that occur when we are here. We've got sideways action here. We have a big shot to the upside here. We pretty much fly right through it here. Sideways action here, sideways action here. What this is telling me is that we do have a little bit of dampening momentum, and if we take a look at this from, let's put another price level in here, right around there. Between 580 and 590, we've got ourselves a pretty range-bound area. 581 is the area that we've been trading long off of, and did so very nicely the last couple of trading days off of that area. We see that 580 has been a good bounce point. It was a surprise day before yesterday, but it certainly did hold. And once you start seeing those levels break out, you know that you can take them. What I do see here below is a lot of dampening action, as I said once before. So the question is going to be, can we hold above 585.76? Pre-market action for Apple this morning has got us at 579. So we are well below that level, but support action really is something that we should see round and about this area, 589 to 579, 577. There's a bit of congestion to the left there. We can see that holding up this space, but we are drifting a bit lower. The question is, and what we just did actually was pop off the 200 on the 15-minute chart with a pretty good sized wick. What's the ideal trade? Today, if you're day trading Apple, the retest of 581, that 581 to 582 area, if it comes into a rejection region or it fills the gap and then begins to reject, you know there's downside momentum. Folks, I know you're used to Apple just running like the wind, but I've got to tell you something. In this particular formation for Apple, you've got to be extremely careful to not sit back and go, yep, well, it's recovering, I'm all right. Because I know a lot of people have a great deal invested in Apple and have watched things fall and have been holding on and watching it move, but an $80 move is very, very significant. Actually, 85 bucks, if we want to talk about the very top of what it is that we were looking at, maybe almost 85, maybe 80. All right, but in the end, extremely important for you to realize that that is a very, very savage move. It's very deep and it's coming into significant resistance. You might say, but hey, Anne-Marie, this move right here, that was a $100.20 move and it went straight up. Yes, exactly. Except for the fact that it's trading above all these moving averages and not sitting right on them looking like they're going to fail, and actually sitting underneath all of these moving averages and all of this major resistance. All I'm saying is this: a lot of us fall in love with stocks. Apple is one of those things that people just love. You have got to be objective about how you look at a stock and what's ahead based on formations. If it pops up over 590, hey, listen, you just breached something really important. It's going to stair step into 602. 601 to 602, and then if it holds that, it's going to move up into 609, and you can stair step the process. But if you break support and then come down into this region, this 38.2, and you fail it there, or you pop up and give yourself a lower high, please do not ignore the signs, right? It's very, very important to trade, if you are a technical trader, to take a look at the technicals and to pay attention to what the market action is looking like in order to hold you. Do you see this SMI? Do you see how damp this momentum is? This is negative divergence right here. Okay? Absolutely negative divergence. So when we have this SMI with negative divergence, we need to pay attention and see if, hey, listen, are we coming into support? We need to take a little bit of profit right here, watch it come back. If it holds, fine and dandy. If it doesn't, we've got problems, all right? And what we did was fill a gap, pop up above it, and now we're coming in to test the base of the gap. We've lost the base of the gap and are now sitting inside it once more. If we fill that gap, it means what that was a failed breakout. And now we're going to be working under here again where we've got a little bit more gap action. All right, good luck trading this one.